Imagine waking up one morning and realizing your paycheck just got bigger or smaller. That's the kind of impact tax policies can have on your daily life. That's the reality of tax policy. One law can change everything. It can affect how much you take home, how much you save, and even how you plan for the future. But what does Trump's tax overhaul really mean for you? How does it affect your wallet, your savings, and your financial planning? Well, the Trump-era tax cuts were one of the biggest tax changes in modern history, aiming to stimulate the economy by putting more money back into the hands of individuals and businesses. Now, as parts of those policies are set to expire or be revised, your finances could take a hit, or get a boost. The uncertainty can be unsettling, but understanding the changes can help you prepare. Let's break it down. In 2017, the Tax Cuts and Jobs Act, or TCJA, lowered tax rates across the board, affecting both individuals and corporations. The corporate tax rate dropped from 35% to 21%, and individual tax brackets were adjusted. This was a significant shift aimed at encouraging business investments and economic growth, and more importantly, the standard deduction nearly doubled, while some personal exemptions disappeared. This change simplified the tax filing process for many, but also eliminated some benefits that taxpayers previously enjoyed. Middle-class households saw lower tax bills due to reduced rates. This provided more disposable income for everyday expenses, savings, or investments. High earners benefited from lower top tax rates. This was a point of contention, as critics argued it disproportionately favored the wealthy. Small businesses got tax breaks through the qualified business income deduction. This was designed to help small business owners reinvest in their operations and spur economic growth. But there's a catch. Many of these tax cuts are set to expire in 2025. This looming deadline creates uncertainty for individuals and businesses alike. So, what does this mean for your wallet? If the tax cuts expire, you could see a noticeable difference in your take-home pay and overall financial health. If you're a W-2 employee, your tax rate might increase when the old system returns. This could mean less money in your pocket each month. If you're a business owner or freelancer, your deductions could shrink. This would impact your net income and potentially your ability to reinvest in your business. If you own a home, the cap on mortgage interest deductions might impact your finances. This could affect your monthly budget and long-term financial planning. For example, let's say you earn $50,000 a year. Under the Trump tax cuts, you likely saved $1,000, $2,000 annually. This extra money could have been used for savings, investments, or paying down debt. But if those cuts expire, expect your tax bill to jump back up. This could mean tightening your budget or finding new ways to save. Before Donald Trump was re-elected, policymakers were debating whether to extend, revise, or let these tax cuts expire. Let's break this down. Extensions. If extended, tax rates remain low and deductions stay the same. This would provide continuity and stability for your financial planning. Reversals. If reversed, taxes go up, especially for middle-income earners. This could lead to higher monthly expenses and less disposable income. Finally, new reforms. A new administration might introduce a completely different tax policy. This could bring new opportunities or challenges, depending on the specifics of the policy. Regardless of political views, one thing is clear: your personal finances depend on tax policy. Staying informed and proactive can help you navigate these changes. If you want to stay ahead, start planning now. Speak to a tax professional, explore deductions, and prepare for possible changes. Being proactive can make a significant difference in your financial health. What do you think? Should these tax cuts stay, change, or disappear? Let me know in the comments. Your opinion matters, and staying engaged in these discussions can help shape future policies.